What are specialty chemicals and how are they really different from commodity chemicals?
Commodity chemicals, which are standardized and produced in bulk. Specialty chemicals are tailor made for specific performance applications.
Globally, we are facing volatile times because of trade wars and tariff related issues. What are the key risks for the sector?
Actually, specialty chemicals is not really as much impacted by this 50% tariff. The key reason is
Hello, everyone. Welcome to the podcast on the Indian specialty chemical sector. I'm Shibani Kurian, and with me is Arjun Khanna, who's a senior research analyst at Kotak AMC who tracks the sector. India's specialty chemical sector has been a transformative one, and in this podcast, we will explore its potential growth opportunities and key risks. Hello, Arjun.
Hi Shivani.
So let's start with the basics, Arjun. What are specialty chemicals and how are they really different from commodity chemicals?
So, the specialty chemicals are high value, low volume products which are used for specific applications. So, unlike commodity chemicals, which are standardized and produced in bulk, specialty chemicals are tailor made for specific performance applications. In terms of commodity chemicals, some examples would be, say, sulfuric acid or ammonia. For specialty chemicals, they would be pharmaceutical ingredients. You would have also agrochemicals, coatings, and other such specialty products. Now, in terms of specialty products, to produce them, you require advanced R&D. They often require complex manufacturing processes, and they require in-depth and close customer collaboration. Hence, this affords specialty chemicals to have a higher profitability margin, but this also demands with it a significantly higher technological expertise, coupled with what we see in terms of regulatory compliances.
Now, that's interesting. But let's also explore where India stands in the global landscape. Now, in the global chemicals sector, India's market share today is at about 3%, while China has about 40% market share. In your opinion, what are some of the competitive advantages that India enjoys that will help it gain market share over a period of time?
Sure, that's very interesting. When we look at India, India is a fast growing developing country. We have a vast local market. In addition, we are rapidly urbanizing. The middle class is growing. So the demand of chemicals within the country will continue to grow. In addition, if we look at the labor pool, we have a vast set of chemists and chemical engineers available. Hence, we do believe the expertise will be strong within India. If we look at Indian companies, they are incrementally spending a lot more in terms of R&D and increasing their technological capabilities. Hence, India and its companies have a right to win. As compared to China, labor costs in India are significantly lower, and hence, possibly that's one advantage. In addition, when one looks at China, if you look at the environmental landscape out there, there was a significant crackdown in terms of pollution, leading to a lot of companies looking at realigning their supply chains. Post COVID, we have seen China plus one strategy where companies are looking at getting geographically divergent, not just in one country, but have footprints in a number of countries. We believe possibly India would be a key beneficiary of the same. You are absolutely right. China is the largest and has more than 40% share. However, of late, we have seen a recent policy move by China, where on July 15th, the policymakers talked of the anti-involution policy. Essentially, this policy looks at trying to promote quality versus quantity. They are trying to delegitimize price wars and essentially push more people towards producing quality products. So essentially, we see unviable players potentially exit the market, helping the market share of India increase even further. It's actually very interesting, Shibani. If one looks at the top 7 major economies of the world, India is the only net importer of chemicals. However, in specialty chemicals, we yet have a trade surplus, and we expect possibly this could grow in the future.
So, Arjun, as you mentioned, the Indian specialty chemical sector is diverse and there are various themes that one can evaluate. So, when you look at it from a near term as well as a slightly medium to longer term perspective, what, in your opinion, are some of the key dominant themes within the sector?
Sure, Shivani. There are actually a lot of themes that one could actually look at playing, but I will try and articulate two of them in greater detail. The first being the pharma side. Indian CDMO players have a low single digit market share in the global CDMO pie. In addition, the local healthcare market continues to grow. This, coupled with a strong growth in the pharma intermediate export market, lends us to believe that the pharma space is one very important one. The second is on the agrochemical side. In terms of agrochemicals, the crop protection markets have been weak of late. However, research suggests that the major global agrochemical players are running inventory levels close to an 8-year low. We believe with inventory restocking, both volumes and margins for the agrochemical players will improve going forward. In addition, in terms of advanced materials, if we look at refrigerant gases, fluoropolymers, battery chemicals, energy chemicals, and possibly semiconductor chemicals would be key growth drivers going forward.
Thanks, Arjun. But no discussion on any sector will be complete without focusing a little bit on the risks that are facing the sector. Globally, we are facing volatile times because of trade wars and tariff related issues. In your opinion, what are the key risks for the sector and how does the sector navigate, especially in terms of the tariff related uncertainties that we are facing today?
Sure. And Shivani, if you look at tariffs, it is the topical question right now. India has been hit with 25% reciprocal tariff. There is a penalty tariff which is at this point in time anticipated by the end of August. That being said, actually, specialty chemicals is not really as much impacted by this 50% tariff plus plus. The key reason is a large swath of specialty chemicals is exempt. On the pharmaceutical side, they are exempt from these tariffs. A lot of the agrochemicals are also exempt from these tariffs. Some of the refrigerant gases, such as R134A, is also exempt. Yes, this will impact a smaller percentage of specialty chemicals, and the impact will be large for those products where they won't be able to export into the US market. But for the vast majority of them, this will actually be a non event. The other major risk which I see for the specialty chemical side is the overcapacity in China. We did talk of the anti-involution of a few questions back, but in terms of the overcapacity coming off, that could be one way of that being resolved for the market. But at this point in time, it remains a risk. The other risk which I foresee for India is the availability of feedstocks. India doesn't have a lot of natural gas or crude oil deposits. The net result is that for certain chemical chains in terms of feedstock, such as carbon 1, C1, C2, C3, we continue to be deficit. Another near-term risk possibly could be a global slowdown. We are seeing weakness in the Europe and the APAC market to some extent. Lastly, where we do see possibility of a risk, and this is across all chemical markets, and the key reason is when dealing with chemicals, these are very hazardous substances, and we could see industrial incidences such as what we saw in the Bhopal gas tragedy. So they need to have stringent safety protocols because this risk can play out for any company at any point in time.
No, absolutely. And finally, let's also talk a little bit about valuations of the sector. Where do valuations stand currently, especially in context of the historic average multiples? And why do you really believe that this sector has a longer term growth potential?
Sure. And generally, when one speaks of specialty chemicals, one needs to understand yes, this is cyclical. That being said, if one looks at a longer period average, say over the past decade, the specialty chemical basket would have outperformed the Nifty. And this is in spite of weakness we have seen in the past 2-3 years, which was largely led by Chinese dumping due to excess capacity. And to some extent, because of global inflation, we saw interest rates rise up, which led to inventory destocking. We are possibly seeing green shoots on both these aspects. So, if one looks at Indian chemical companies, they do trade on a specialty chemical side more than possibly around 40 times 1 year forward. This is significantly higher than the Nifty, but we do believe that the outlook remains robust. As per recent Niti Aayog report, they are anticipating India chemicals business to reach almost $1 trillion by 2040. This entails roughly a 9.5% CAGR over a long period of time. In addition, if one looks at the chemical side of things, there is a strong focus on Atmanirbhar Bharat. And this combined with a strong technical expertise, coupled with strong policy support, we believe all the right ingredients are in place for India to be a base for specialty chemicals globally.
Thank you, Arjun. That was indeed a very interesting discussion on the specialty chemicals sector in India.
Thanks, Shibani. Very insightful and interesting questions.
Thank you, everyone, for listening in to the podcast. Hope you had an insightful session. Stay safe and stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.